Zepto guarantees your groceries in 10 minutes, but investors are asking a different question. When do they guarantee profits? Last year, Zepto made rupees 22,623 crores in revenue. That number more than doubled in a single year. But in the same year, they also lost nearly 6,000 crores. Most headlines stopped there. Big revenue, bigger losses, end of story. But buried in that 800-page draft red herring prospectus they just filed with SEBI are three numbers that tell a completely different story. And one of them might make you think twice about how you read any startup's financials forever. In the next few minutes, I'm going to decode the exact math behind Zepto's business, and by the end, you'll have a 10-point scorecard. So when you see Zepto IPO trending, you'll know exactly which numbers to check before you even think about investing. Subscribe now to stay informed about your money on DeKoder. Let's strip away the jargon. Zepto is a quick commerce company, but their secret isn't magic. It's real estate. They don't use big supermarkets, they use dark stores. Think of a dark store as a mini warehouse hidden in your neighborhood. No customers are allowed, just shelves, packers and riders. As of March 2026, Zepto ran 1,139 of these dark stores across 66 cities. They handle about 2.3 million orders every single day. But here's the catch. Running mini warehouses is incredibly expensive. Rent, electricity, salaries, these are fixed costs. They don't change whether you deliver one packet of chips or 100. So Zepto is obsessed with one metric. Orders per day or OPD. If a store does 500 orders per day, it bleeds money. If it does 2,000, it might just break even. In the fourth quarter of 2025, the average Zepto store handled around 1,400 orders a day. By the end of financial year 26, quarter 4, that number had crossed over 2,000, a 50% improvement in store productivity in 12 months. That's the headline that most coverage missed. Analysts love words like flywheel and network effects, but let's simplify them. What Zepto is actually building is what we call a neighborhood loop. Imagine a 3-kilometer circle around your house. People are ordering as per their regular chore, and over time, more and more people start ordering from Zepto. To keep up, Zepto opens another dark store inside that same circle. Now the rider travels a shorter distance. Delivery gets faster and cheaper. Because it's faster and cheaper, you order more often. That's the loop. And the data shows it's working. Total cost per order fell from 181 rupees in the second quarter of 2026 to 128 in the fourth quarter, purely because of volume. As more orders run through the same stores, the cost of each order comes down. But building and running that loop requires burning enormous amounts of cash. Which brings us to the question every investor is actually asking. How do they make money on top of your grocery order? Here's the thing most people don't know about Zepto. The company is not actually trying to make money selling you groceries. Groceries are the reason you open the app. But the real business sits one layer underneath. It's advertising. Think of it this way. A person scrolling Instagram might see an ad for a protein bar. They may or may not be thinking of buying one. But a person opening Zepto at 9 p.m. and navigating to the health section, well, they are almost certainly going to make a purchase. And that's what every brand in India wants. Your attention at the exact moment you're about to spend money. And Zepto has built physical locations to reliably manufacture that moment millions of times a day. In financial year 2026, Zepto earned around 1,636 crore purely from advertising. That's 2.5 times what they made from ads the year before. And here's the number that should genuinely stop you. Brands that don't even sell a single product on Zepto are still buying its ad inventory because they're paying for the audience and the moment, not just the shelf space. Amazon figured this out about 15 years ago. Its advertising business is now one of the highest margin businesses Amazon runs. Zepto is building the Indian version of that. The dark store network is the distribution infrastructure. The actual product is the attention of India's urban consumer at the moment of its highest purchase intent. Zepto doesn't loudly advertise this. The pitch to you as a consumer is fast, convenient grocery delivery. But the real pitch running quietly in the background to every brand in India is that we have a captive audience right when they're ready to buy. Pay us to reach them. Now let's look at where Zepto actually spends money. 3 big buckets. First, marketing. Getting you to download the app and keep coming back. In 2025, Zepto was spending 34 rupees on marketing for every order. Today, that's down to 1 rupee per order. People are coming back out of habit, not because of discount campaigns. That's a huge real improvement. Second, fixed costs. The rent, electricity, salaries for those stores. As orders went up, this cost fell from 80 rupees per order to 52. Another genuine win. But then we hit the roadblock, delivery. Paying the rider, the fuel, the packaging. This is the hardest problem in quick commerce. Over the last several quarters, this number has barely moved. It's stuck at around 61 rupees per order. Why? Because the last mile, which is the actual human being riding a bike to your door in 10 minutes, is expensive. It doesn't scale the same way a dark store does. You cannot automate a bike. So here's the full picture. Total adjusted earnings before interest, taxes, depreciation and amortization EBITDA loss per order was 136 in 2025. By financial year 2026, it came down to 79. And in the fourth quarter alone, it dropped further to 59 rupees. Now, a loss is still a loss, but the direction matters enormously. The number moved from 136 to 59 in 18 months. And if that trajectory continues even at half the speed, Zepto's path to break even becomes just a calculation and not a promise. Before we get to the scorecard, there's one more thing in Zepto's DRHP, which is the draft red herring prospectus, that got a lot of breathless coverage, but not a lot of explanation. In April 2026, the Enforcement Directorate, the ED, issued summons to Zepto's 2 founders, Aadit Palicha and Vora. The coverage made this sound alarming, but let's understand what actually happened. The ED was investigating under FEMA, the Foreign Exchange Management Act. They asked for documents, foreign investment records, shareholding patterns, bank accounts, loans. Both the founders appeared and both submitted everything that was asked for. Here's the context that you should not skip. Zeppto was originally incorporated in Singapore. It later moved its domicile to India, a process called reverse flip. Many other companies have done the same thing in the past. When a company does a reverse flip, it unwinds a multi-country corporate structure. That process routinely attracts regulatory scrutiny. It does not mean any wrongdoing, it just means a lot of paperwork. As of June 2026, Zeppto has stated it has not received any further communication from ED and no findings of wrongdoings have been issued. The real question for investors, therefore, is not whether there was an ED inquiry, it's actually to know whether the reverse flip has been fully regularized with RBI and SEBI. According to the DRHP, that process is still ongoing and therefore this becomes a place that you should keep an eye out for. Now, the valuation question. The IPO is structured as a fresh issue of around 8,010 crore rupees plus existing investors selling shares. So the total issue size is around 11,000 crore. Here's the question that will define how Zeppto trades on listing day and beyond. Is Zeppto a grocery delivery company or is it a retail media company? If it's a grocery company, compare it to Swiggy, Blinkit, think thin margins, high operational complexity. But if it's a retail media company like Amazon Advertising or Instacart after its US IPO, the entire valuation logic changes. High margin, scalable, data-driven ad revenue sitting on top of a logistics moat. Well, the answer is it's probably both. Investors who figure out the right ratio, delivery economics versus media economics, are the one pricing this correctly. Everyone else is looking at the wrong number. This brings us to your scorecard. When you see Zepto IPO in the news, don't ask, is it good or bad? Ask, are the right numbers moving in the right direction? These are the 10 things to track. Screenshot this and save it for later. Number 1, loss per order. Is it still falling or has it stalled? Number 2, orders per store per day. Is it still climbing past that 2,140 number? Number 3, fixed cost per order. Is it dropping below 52? Marketing cost. Can they hold rupees 1 or does competition force them to start spending again on marketing? Number 5, delivery cost. Can they finally break below the 61 rupees? This is the hardest one. Ad revenue. Growing as a share of total revenue or flattening? Number 7, store expansion. They plan to go from 1,139 to roughly 1,900 stores by financial year 2030. New stores hurt per order economics early. Watch whether the new stores ramp up fast enough. Number 8, cash runway. They have around 5,680 crore in cash. Free cash flow was negative at about 4,300 in 2026. You can do the math. Number 9, user frequency. Is growth coming from existing customers ordering more or from new customers who might churn? And number 10, regulation. If gig workers' laws change, riders' costs go up, delivery costs, that one bucket that hasn't improved gets worse before it gets better. If these move in the right direction, Zeppto could be one of the most dominant consumer platforms India has ever built. If they turn red, you're watching a company subsidize your groceries with public money. Quick commerce is a race between the neighborhood loop getting stronger and the cash burn getting worse. Blinkit, Zepto's biggest competitor, has already reached adjusted EBITDA profitability at the unit level. Zeppto is not there yet, but the gap is narrowing quarter by quarter, at least on paper. The most important number in Zepto's financials is not on the front page, it's buried in the footnotes. 59.40 per order loss in the fourth quarter of financial year 2026, down from 136 18 months ago. Whether that number reaches zero before the cash does, that is the Zeppto story that we'll find out together. If this video saved you from making an expensive mistake or helped you ask a smarter question, the subscribe button has already paid for itself. Hit like, share this with someone who thinks safe investment means never reading the fine print, and I'll see you in the next explainer.